Hey guys, Don Durrett, Gold Stock Data. I had these charts in my monthly newsletter and I wanted to explain them a little bit. Um, First of all, we're going to start with Nvidia. I think this is the trigger point for the stock market. Once we get below 150 on the Nvidia, I think that's going to be the game over situation where the stock market um, struggles to basically get its mojo back. We can see here, this is the daily. So the 200-day moving average for Nvidia is 150, 154. So, and we've been well above it. So it hasn't even come close to touching it. I have to go back. But since this year, since the second half of this year, not even close. And I think that when we get below that, I think it's going to be lights out. So we had a big breakout earlier this year, especially off of the April sell-off. But after that, it kind of was a rocket ship, and you can see where um, we had this number five here. We had this. This is the gap that I think we're going to come back and refill. We had these double back-to-back gap ups, and those back-to-back gap ups at 150. That was kind of the rocket ship taking off. And it ran from, on this one, 130 all the way to 185, which is exactly where we closed today, 185. And so we ripped from 130 to 185. It's kind of straight up move here, breakout move. And then once we hit 185, you can see we touched it, touched it, touched it, touched it, touched it. These are the dailies. So we touched it like 6 days in a row and went back a few more. And then the next week we touched it again. Then we touched it again. It couldn't get above 185 until uh, late September. We finally got above 185. So it's kind of a basing pattern here, 175, 185. So you had this channel from 150 to 185, which is still in place. And then you had an upward channel once you got this basing, and we kind of broke down a little bit. But we started this upward channel right here in late August. And it ran all the way up to 212. So we broke out of the channel, 212, came back, retested it, and then went back to 210, but couldn't get a new high. And then couldn't get a new high, and then boom, look, 3 red candles in a row. And it was actually 6 red candles, 7 red candles in a row, daily candles in a row, all the way back down to 185. So went to 212, couldn't break out, all the way back to 185, and then had a gap up and tried to make another run, but then we had 3 red candles in a row, said, no, 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 you're not going there. And then came all the way down to 185 again, and then had a break, another big green candle 190, but it didn't hold. And then they released the earnings on this number four here. They released their earnings, and they were all the way up to 195. It opened and it went up to 195. So if it would have closed there, it would have been in the green. And then it went all the way back down. So right here, it turned red for the previous day, and then it went closed. So look at that ugly engulfing candle, and all the way down. So that means, what this means is it closed at 175, 176. It's where it closed, but it actually traded all the way to 195. That was an ugly, ugly candle. And I actually think that candle right there was kind of the end of Nvidia. And then you have the 100 moving day average right here, which it went back down and touched and held. And then the very next day it traded below it. And then the next day it got above it. And then it went and it traded right on it. And now it's trading below. Well, actually, it jumped back to above it today. It's at 185. But it's basically in this channel here. And I don't think that Nvidia is going to be able to make a new high here. And if it gets below 150, I think it's going to be lights out. the issue here for Nvidia is their competition. Back here in July, when they were ripping, when this little rip right here, June, July, this rip, nobody thought they had any competition. They had this all to themselves. And now it's turning out that no, they probably don't have this all to themselves. As a matter of fact, they have like five competitors that are all coming out with AI chips that can definitely compete head to head with NVIDIA. You have the parallel processing chips that AMD's coming out with, and there's three companies in China that are using them, and they work. And then you have the Tensor chips that Google has. So you have two competitors in the US and you have three competitors in China. So they have five competitors now, and they're all selling these chips. It's not like they're on the board, they're actually selling them. And Meta said that they were going to switch from using NVIDIA's chips to using Meta's Tensor's chips. And the reason why is because they cost less and they use less energy. And so my point is that NVIDIA grew from 300 billion in 2021 all the way to 4 point, I think 3 trillion. I think they're 4.2, 4.3 trillion dollars, the highest market cap of any company in the world. They went from 300 billion again in 2021 all the way to 4 billion. They grew too fast and they can't maintain that growth. Not only can they not maintain it, but they don't have the same customers every month. When they sell those chips, those customers have to come back and buy more. They're kind of like, like Ford or GM where they sell cars, and they got to find a new customer every month. Whereas Microsoft or Google, these companies, or Facebook, their customers, they have the same customer every month. Same customer comes back and pays them. And so NVIDIA has a much more difficult situation when they sell chips because unless you have a cycle where that same customer has to come back and replace those chips, which is kind of what Intel did. Intel, you know, they would come up with a new processor, and then the new processor would go into the new computers. But those computers were out there. The new line of computers were going to come out, so they kind of did have an ongoing customer base. And but back then, Intel really didn't have any competition until AMD came around. But it's difficult to have a big growth when you have competition. It's hard to have growth, and so NVIDIA doesn't really have the moat that everybody thought they had. And this is going to be difficult for them to maintain their market cap. So I think they're going to lose $1 trillion in value. And I think they're going to go sub 150 this year, and it's going to be. I think this is going to be the trigger. It's my guess. Now, here is this is the HUI, which is the gold miner index, and the S&P 500 in 2001. The S&P went flat after the dot-com bubble in January and then the 9/11 event in September of '01. The S&P went flat. Not only did it go flat, but this line right here is the 0% growth line. So S&P had no growth. In fact, they had negative growth for 3 years till 2004. Well, they started growing again middle of 2003. But from '01 to '03, we basically had no growth to little growth. I mean, you had a little bit of a bounce in '02, but very little. Basically, it was flat to down for all the way till 2009. In 2009, we had a dip, and then it started going up because you had the 2008, 2007 crash, and then it started going up 2009, 10. But you had basically a multi-year period of no growth. And when that happened, the HUI and gold here was about $250, and gold in 2007, I think was 600, 700. So gold went up. So the S&P was flat, gold went up, and the miners just took off. You can see the miners, it went from sub 100, the HUI, all the way up to 6. This was about 635. But this, what we've seen in the HUI right here, so now the S&P has been going up here. But one thing I wanted to show you here is this correction in gold, especially right here. So this thing started going up in 2012, 2013. As soon as the S&P started going up and the economy came back, gold and the miners crashed. This was 2016 was the very bottom of the HUI. It was sub 100, and then we started back up. But here in 2025, I'm going to show you another chart on this below. We had this breakout. So the HUI is actually broken out while the S&P is going higher. But once that S&P flattens out, this is going to get a lot more strength, if you will. Wind at its back. Okay, the next chart is gold. First thing we want to look at is this number one. We were stuck in this channel below $2,000 gold in 23. So in 23, gold basically didn't do anything. It was in a tight channel, 1,800 to 2,000. But it was basing. So it was basing right around $2,000 gold. And then in March of 24, this is when I became uber bullish in gold. And it was like once we had these candles here in March, these are the weeklies, the end of March, all through March, and then early April, these green candles with this little breakout action here. And this was actually the very bottom of the HUI as well. But this breakout right here, that's told me that we don't have to worry about a breakdown in gold, because we had this basing pattern goes way back. It was like 10-year basing pattern. So this $2,000 breakout in gold was really the most important breakout from gold. And we're still riding this. We're still riding this $2,000 breakout. So then we based here at 2,200 after we got above 2,000. And then we broke out again, and we had a little basing at 2,400. And then we broke out again all the way up here to 2,800. And not much basing, about a month's worth. And then, boom, we broke up this green candle right here, got above 3,000, and we didn't come back and retest it, which was really important indicator of how strong this bull market was. We retested 2,000. Maybe we didn't retest it. Maybe this channel. I don't think we did retest 2,000 or 3,000, showing that this was going to be a very strong bull market. And so this is a very, very powerful chart, but the breakout in March of 24 was really the key to it all. And then everything else, it was like it was expected. We were just going to run. We were just going to go, go, go. And you can see there's no breakdowns in this chart. It's just create a base, go higher, create a base, go higher. We have not had any significant corrections. And then we based at 3,300 this summer. Now we're in 25. And we based here at 3,300 just about all summer long. And then boom, in August, we broke out here, and you can see these green candles, boom, 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 boom. And this is August and September, all the way in October. And we got all the way almost to 4,400. And now we're basing again, and we'll go higher. But this is a very, very powerful chart. We had a couple of corrections here, but we've retraced it. This chart's a little old. We went all the way back almost to 4,400, and now we're sitting at 4,200, I think, today. But this is a very potent chart that basically shows you we're in a very strong bull market, and any corrections are likely to be short-lived. You rarely see charts that powerful. Here's the silver chart. Now, silver back in 23, gold was stuck under 2,000 and silver was stuck under 25. So this line right here is $26. So it was really stuck at 26. And then we broke out above 26. Guess where? Right in March of 24. So not only did gold and the miners break out in March of 24, but they pulled up everything else. So this broke out silver. And if you notice, we never, this green candle right here, we never went back in this channel below 26. This channel broke out above 26 and stayed there, which is a really good sign. So this was like the beginning of the bull market in silver. But we didn't really get confirmation until this channel here. We'll get to it. So we had it. We had some. This was a really important one. Then it tried to break out above $30. This line is the $30 line. But as you can see, we touched it for many, many months, all through the rest of 24 and early 25. And then we basically stayed right here on the 28, 30 line. And we couldn't break out and get above and stay above 30. Well, we kept coming back and retesting, I should say. We couldn't break out above 34. So we had this ceiling of 34. So we basically stayed in this channel here from May of 24 for a whole year. We stayed in the silver was basically stuck for a whole year in this channel. And then finally this year, so it's been a struggle. Silver has been a struggle. So even here at these levels at $30 silver, so all the way up until 25, the silver miners have been trapped. They haven't had any margins. I mean, $32 silver, they're not making any money. And so the silver miners did squat, and so the silver miners are very cheap. And then finally, silver tried to, we had this, here we were trying to break out of 34, and then boom, silver has this really ugly red candle. It goes all the way back to 28. But this green candle here said, no, 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 we're not going to stay here. We're going back up. And we went to 32, and that right there, this green candle here, when it went back to 32, that was the signal. That big green candle, there was a signal that, oh, we're going higher, people. Get ready, get ready. And we based at 32, and then boom, we broke out above 34. And this one here turned out to be a massive breakout candle. Big candles are really important. They basically are big indicators of where we're going. And then we based at 30. We based at 38, and this was in the summer. This summer in 25, we based here at 38, and then boom, in August, we got above 40. And once we got above 40, it was like, here we go. Right here at the very end, we got above 40, and once we got above 40, notice no retest of 40, which was great sign, a great sign. And I wasn't really surprised it didn't. And the reason why it didn't is because we based at 38. And so once we got above 40, it was like, boom, 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 here we go. We got up to 50. And this is where we're at. We're basing at 50, and we're going to go higher. But this chart is very, very powerful, like the gold chart. The last chart is the miners, the HUI, and this kind of correlates with the gold and silver charts. So here we had this 2024 March breakout. This was the bottom. If you look right, you can see it never touched it again. So this March was the very, very bottom at 200. It was at 204 on March 1st, 2004. The very, very bottom, the last bottom. And from there, it started a rally, but it stayed in this channel. So the breakout was 365, 350. That was the channel. It was like 200 to 350. So we've been in this channel since 2013. How's that for a long, long, long base? And then finally, this year in 2025, just very correlated with silver and not so much with the miners, is we got right here, we got above all three of the lines right here. We got above them, and that was kind of the signal that here we go. We touched it, and then we started going up. But this breakout here in March, when we broke out above this 350 level and went in and basically created a little bit of a basing at 400. And then once we got above it, this green candle right here, this breakout candle, we never retested it. Look right, we never retested it. And boom, the miners just took off here. And this was August. So we had August, September, October, and we got all the way to 693. So that was kind of the breakout. And now we're basing here between, I don't know where it's gonna, the cycle low is gonna be. I don't think we'll go below 500. Probably somewhere 550 to 500. We'll come down and base somewhere in here. So we're currently about 660. So we're around 660 right now. I don't think we'll go to 700. We could, but I don't think we're going to go there before we come back and base. But bottom line is these charts all, again, this chart was this based for 10 plus years. And now we're broken out. It's not going to end quickly. This is going to go a couple years. I think this is going to go at least 1800, and I think 2400 is in play here. It's kind of my expectations. Now I have two more charts that are really important, but I'm just going to talk about them. I don't have the chart to show you. The first one is the S&P in gold. This chart, Michael Oliver has been talking about this. He says that this is really important chart. Since 2015, gold and the S&P have pretty much traded similarly. I mean, not it didn't they did not they stayed on they not either one broke out basically. They basically traded the same. If you bought gold in 2015 or you bought the S&P in 2015, you're pretty much even. And his point was that gold, and there was like four touches where they was trying to break out. Gold was trying to break out, but it never could. And gold just broke out. And so now gold, in this year, you know it, because gold's up 60% for the year and the S&P is only up 15%. So gold has finally broken out versus the S&P. And what Oliver likes to say is this is something that's new. This is just happening. And so gold is likely going to outperform the S&P. Now, if we go back at this chart here, this is pretty much gold in the S&P. But you can see that right here, gold was outperforming the S&P and the S&P, and then S&P was, and then right here since 2015, right about here, they were both going up. So from here to here, they were basically both going up, and not one was outperforming the other one. But recently, in the last year, now gold, as you can see, gold is outperforming the S&P. And his point is that this is early innings, which is significant, which kind of fits in with these markets being so strong. The other one is the gold silver ratio or the silver gold ratio. So to get the gold silver ratio, to divide gold by silver, silver by gold. Oliver likes to use silver gold ratio because it's percent. I actually like it too. So if you use 1%, and this is a new breakout, this is just happening. So the gold silver ratio is down to 73. And that's high. It was in the 90s not too long ago. So it's just starting to break down. And the silver gold ratio is at 1.3. If you use 1% of 4,000, it's $40. Or 4,100, it's 41. But if you use 2%, which I think is a better number, silver today should be 82. And it's only at 57, so it's very cheap. And I think it's going to go somewhere between 2 and 3%. So if it was at 3%, it would be $120 silver. And that's how cheap silver is right now. I think it's going to go at least 2.5, 3%. It's my expectation. But my point is, both of these charts are early. They just started to break down. So it's not like we're late in the cycle here. I The gold silver ratio, I think, is going to go to 35-30, and the SGR, I think it's going to go well, somewhere between two and a half, three. Let's put it that way. But so I wanted to go over those. So we'll end it there.